Good morning, good afternoon, good evening, wherever you're at. Welcome to the BitLab Academy daily live stream. My name is Kelly Kellam. You can find me there on my socials at Kelly Kellam. And welcome. You know, we've had a wonderful, it was a little bit of a long weekend. You know, I was looking for the CME futures to open last night at 7, and then I remembered, wait, it's a holiday. I've been working so much. I forgot today was a holiday because we don't take any days off here. We don't take those bank holidays. We're here every day as much as we can for you here, not only here at BitLab Academy, but also with the whole Hit Network team. So shout out if you are here in chat. Let me know where you're watching from. Let me know what your born on date is. We're going to make this a regular thing so we can build community. We can draw connections with each other, identify if there's anybody, you know, maybe in our local area that we can meet up with. So that's what I want to do here. I want to make sure that we are building the best community in crypto. So shout out to everybody that is here in chat. Shout out to everybody that's been, was able to identify those good positions before we've had this big push up, a few weeks ago, early January. And that's what this is all about. It's so we can share our experience to help bridge that gap from beginner to pro. No matter where you're at on your journey, I guarantee you're going to find value in the streams here at BitLab Academy. Make sure you hit that like button, hit that subscribe button, ding that bell. Let me know if there's any issue with any video, audio in the chat. I'm going to try and make it more of my mission to pay attention to what's going on there. I'm doing this as a one-man show for the live stream, so I have a lot to pay attention to when we're doing this. So shout out to everybody that's here, and shout out to everybody that shows up before the stream starts. I'm going to try and make it as much as I can, make it more of a spot, when you do show up early, I'm there in chat, and all of us can sort of, the people that are really going after it, really trying to, build that community. We're here early. So how's everybody doing? How you feeling? Did you take a long over the weekend? Did you take a short? Did you sit on your hands and do nothing? Sometimes that's the best thing to do. Well, we got some great things lined up for today. Some things going on in the charts, and so we're gonna go through all these things. So let's go ahead and first start off here with my boy TechDev _52. I just wanted to I pointed this out a few times, and he called this back December 8th. And remember, I've pointed this out at several times now, and this was because he brought it to my attention, mind you. But all of us have our eyes glued to the DXY, the dollar index. What's going on with that? Is it pushing up, bringing weakness to Bitcoin and risk assets, or is it pulling back, giving strength to Bitcoin and risk on assets? Well, there's a better signal that TechDev has found, which is this 10-year Treasury yield, which he called back in December 8th, and we could see on this chart, if we bring this up, this broke out all the way back before the end of the year. It looks like probably sometime early December, broke out of this massive downtrend resistance. And each time this breaks out, let's look at what happens to Bitcoin up into the moon. Now, I'm not saying we're going all the way up into the moon, but first step, we have to look more locally first. Okay, we understand the macro picture, but in order to get those midterm and smaller time frame gains, we need the fuel to do so. And this has proven to be a great signal, watching the 10-year Treasury yield, but then also watching this RSI here on the 3-week. Once we get back above 50, is proving, it's basically suggesting that the strength of the market is coming back into play, because a lot of people, and I just want to point this out, a lot of people look at this RSI and they think overbought, oversold. And in reality, we can use that, but that's just a correlation analysts and traders have drawn here. In reality, what the RSI is providing us is the strength, the relative strength, how the buyers in the market and the activity and the puts versus calls, the buys versus sells, and it's so when we see on these larger time frames that RSI, aka the strength, is over this 50 line, this 50 mark, then we are starting to head into a more bullish sentiment. When we break below it and hold below it, in this case, we broke down right here and then rejected off of it. And we can see this played out a long period of downtrend in 2022. So this sort of before the end of 2023, we are breaking above this, and we're also breaking above this trend line on the Chinese 10-year yield, 10-year, and this, obviously, we can see as this breaks up to the upside, Bitcoin had not broken out yet. So this was leading. So this is one of those signals that you can utilize. And if you don't know how to find it, follow people like TechDev here, TechDev52, or go through and try to find and draw correlations from this sort of data you get from other analysts, and go into your TradingView desk and try to go in and try to find some of these assets and see what correlations you can draw. Now, I wouldn't look at it on a 1 hour chart or a 3 hour chart. These are macro signals when we're looking at stuff like the dollar index and the Chinese 10-year and things like this. We want to utilize things like, I would say, the weekly or above, weekly, 2-week, monthly. And when we start seeing the macro shifts in trend on these other highly correlated assets that can show liquidity is about to come back into risk on or about to come out of risk on, then we use that macro to help then zoom in on the smaller time frames to see where things are going. So as I'm just pointing out here that, and I pointed this out several times, but he called this all the way back December 8th. So people that were following him, or you, if you are paying attention to these other assets that are not, they don't have anything to do with Bitcoin and crypto. Well, apparently they do. So it's good to look broadly away from just staring at the assets you're interested in, because these other financial classes and these other sectors of the financial market can have a huge impact on what happens within the assets you're actually trading. And this is why you want to have that broader view. Now, going on to this next chart, I just want to show we're basically 70% through the halving cycle. We can see this was halving 1 back in late 2012, halving 2, which was in 2016, halving 3, which was it's right after the global shutdown, March 2020. But what we're looking at here is just correlation of when the we're looking at the correlation of when the halving happens and what happens to price. Now, we've talked about this a number of times, but I'm just going to pause right here for a moment and just bring this up again, because as we've all seen, when we look at the relationship of 4-year cycles, we look at relationship of where the bull runs and bear runs are within Bitcoin, we can see a strong correlation as to where the halvings are within the relationship of bull and bear cycles. And as we can see on this chart, each time we've had a halving, we've had some sort of push up into it and then a breakout to the upside. In this case, we had a push up way early into it. We likely would have had a smaller pullback, but we had this black swan event with the global shutdown, which basically took these lows out, and then a complete immediate V-shaped recovery, and then we resumed immediately following this halving into this upside price action. Now, again, I just want to reemphasize why this is so important. One of the most attractive things about Bitcoin is the fact that it's engineered with the supply dynamics in mind transparently, so all of us are aware of it. Not just you, not just me, but institutions, macro traders, smart money investors, people that have been gold bugs their entire life, always investing in precious metals and treasuries and bonds and those safe assets. Well, volatility over time will diminish in Bitcoin as the asset class gets larger, as there's more liquidity in this asset class in Bitcoin, and the market cap goes up. But despite the volatility right now, with the fierce ups and the sharp downturns and these, what we feel like are long bear markets, if we look at, ignore the 70%, ignore the gradient here, the color, we can see that there are long periods of multi-100%, if not multi-1,000% uptrends that then have we feel like it's the end of the world because it's an 80%, between 75 and 85% drawdown. But look at where these drawdowns go. If this was a previous low, look at, okay, we had, this was about a 9. It was a huge increase. I forgot the measurement on this, but it was a huge increase from, around 200 or so dollars up to 20,000. And then we pull back to 3,000. And then we go up to 13,000, back to 3,500, up to 64,000. So you're seeing these drawbacks, although they are 80%, they feel fierce. They're nothing as compared to the multi-100% gains to the upside, the multi-1,000% gains to the upside. And understanding that along with the supply dynamics, which is what these halvings are about, the cutting in half how much the mining rewards go to the miners that process, they compete to process and secure blocks. That's what the halving is. So the rewards the miners are getting we can also think of as inflation within Bitcoin, because they're getting paid to secure the network by competing to mine these blocks. And that's new Bitcoin that's being produced. Every 4 years, or roughly 210,000 blocks, about 3 years and 10 months, actually, the reward that miners gets is cut in half. And this is what the halving is, meaning the supply coming into Bitcoin is cut in half every 4 years. There's no other asset class in the history of the world that has done this. And this is what makes us so interesting and such a smart investment for long-term plays, for you know, where it's going to be now, where it is now versus where it's going to be in 2030. Now we can see right now we're already about 70% of the way through, and if we look historically from when the original halvings were, for when the halvings were previously, I should say, and then 70% of the way through. So there's about 30% of this time frame left before we have the next halving, and we see this is roughly allocated about where a bottom was, and some sideways action, a push up, small pullback, and then all systems go. Similarly, we have the bottom, we had some sideways consolidation, all systems go, and then a bit of a correction, and then all systems go. So we have the bottom. Are we going to roll over here yet? We're not sure, but no matter what happens here, we can see historically that things are setting up for some form of a bull market relatively soon. Whether it's an interim bull market that pushes up to the $40,000 range or the $50,000, I don't think it's going to go as high as $50,000, but let's say it goes up to $42,000 and then pulls back. And then, you know, roughly about where the halving is, then we get liftoff. So we see this push up, pull back, liftoff. This was a bigger push up, bigger pullback, and then also a smaller sort of liftoff to top. I'm inclined to believe that as the awareness of Bitcoin has grown, I'm inclined to believe that as the awareness of Bitcoin has grown, the size of the adoption rate of Bitcoin has dramatically increased over the last 10 years. The coverage on news, it's included on all major financial tickers, whether you're watching CNBC or, it's mentioned on Jim Cramer, the wonder god of making bad calls on Jim Cramer's Mad Money, I think it's called. Then we also have discussions about Bitcoin and crypto and regulation coming from the government. Nearly every day of the week, there's some news story about this. There's never been more exposure for Bitcoin, and there's maturity that has come into the space as people become more aware of it, and people have become more weathered from having these sharp increases, these scary times where Bitcoin is dead and then it rockets back up, and then Bitcoin is dead and then we have a bigger liftoff, and then Bitcoin's dead, and then we're continuing to grow higher and higher over time, proving these supply and demand dynamics are perfectly in line with where we should be. In the moment, we get emotional because we're getting a pullback and we think it's all over. And we need to realize that the long-term holders, the smart money, the institutions, they see this not as fear. They see this as opportunity zones. They see this not as fear. They see this as opportunity zones. So you don't need to have gotten the exact bottom, but if you did get anywhere near that $15,000 to $16,000 range, hallelujah and congratulations to you. Remember that and repeat that next time. Sell into the strength of this bull run. Sell into the strength of this bull run, and wait. Be patient. Let this. And unless you're gone through, for instance, BitLab Academy, we have all these new updates coming out. Full trading course and strategies and candle patterns and on-chain data analysis. And if you've gone through a program like that, or you're just a tried and true sort of a trader, then I urge you, you have my, I don't want to say my blessing. It's every decision you make is your own decision. But if you're able to trade these swings where you're able to short near the top and then get out of your short and then short near this 0.618 retracement, and then same thing, rinse and repeat, and you're accumulating on the way down, great. But the point is, even in that sort of nature, these downtime periods right here, this downtrend, are meant for slow accumulation near the top and heavy accumulation near the bottom. So long-term holders are taking profits into this, while who's buying from them? The short-term retail traders, because they're excited about these highs. And then they get left holding the bag. But we're seeing that dynamic is changing. So we're going to move on here. I didn't mean to include this, but look at this. We can use this in conjunction with what I was just talking about. This is one of the things that makes Bitcoin so attractive. Bitcoin has proven supply dynamics, proven inflation rates, proven transparency. You know, governments talk about, I got to rant here for a second. Governments talk about, and it's getting less and less, but governments and ignorant people that aren't fully aware of the beauty and the perfection in the engineering of Bitcoin used to talk about the illicit activity that happens through crypto, whether it be drugs on the Silk Road or any money laundering, whatever, name your sort of illicit activity. And what they have not realized is they're making the argument against themselves without realizing it, because we have ultimate transparency. We have that's one of the reasons why I want to encourage everybody to really dive more into on-chain data, because you're getting a look into the chain of all the behaviors of all the different types of participants on the chain: long-term holders, short-term holders, large wallets, small wallets, the relationship of profitability for miners and where that is in cycles. And there's all these different charts that can give you a direct look at what's happening. And in addition to that, each individual Bitcoin, every transaction that it does and every fraction of it for the history of Bitcoin, from the first, in 2009, when the January in 2009, when the first, when Bitcoin sort of launched, when it was published, to now, every transaction that's ever happened is printed on a transparent ledger everybody can see. So people arguing that illicit activity happens on this, my argument against that would be, well, if you're worried about illicit activity, you should move everything over to Bitcoin, because if it's on Bitcoin, then you have the ability to see the relationship of where everything's been spent over time. Now, getting back to this chart here, when we're talking about that transparency, we understand the supply. This is the U.S. dollar. Look at this is a consumer price index. The cost of goods. Look at this. This is the type of thing I want to be on in Bitcoin. This sort of slow and steady price rise over time, as we can see, just like this. This is what I want to see on Bitcoin. And what are we seeing this on? No, we're seeing this on the cost of goods for urban consumers over time. This is how much. This is just ridiculous. This highlights the beauty of Bitcoin for me. This is why we need Bitcoin. Now this goes back to the time cycles I was just talking about with the halving index, the halvings on Bitcoin. But then take that aside and look roughly about these bear markets are roughly about 14 bars, and then we have a capitulation and accumulation zone. 14 bars. We already had our capitulation, and now we are. And I'm not saying that this is a trader tardigrades chart. And I'm not saying that we're going to do exactly this, but we are setting up historically for the time periods that have played out over time for downtrends into accumulation, into uptrends. We are right on target. Now, looking here, this is I had him on my podcast, Crypto Answered, through my Twitter account on Thursday. Definitely go and follow this gentleman if you haven't yet. Crypto Burb. Yeah, there we go. Crypto_burb. But on this chart, you can see essentially what we're paying attention here is the blue line and the red line. These are moving averages. These are simple moving averages. And the blue line is a 50 on the daily. So this is measuring the average price over the last 50 days, right? And this moves up based on what the price average has done over the last 50 days. This is why this moves a little slower than this immediate price action we see charted here on the chart. Now, the red line is the 200 moving average, which is if it's a 200 and we're on the daily, then this is the average of price over the last 200 days. So we have these very lows here, and then even though this pushed up and accumulated sideways, that's why this hasn't moved much throughout this, because it's the average, it's the mean. It's not the mean, it's the average of this price action. So what we want to see is price action to be above this 50 line to really have a strong bullish sentiment. And we've already gotten above this, and we have a bit of a pullback. We're not even talking about trend lines here, where we had this massive downtrend resistance and this massive trend support, this falling wedge that we've seen so many times here on this channel. But we've broken above this. We've gotten a golden cross with the 50 and the 200 here on the daily chart here on Bitcoin US dollar pairing, and we've had the pullback. And as it stands right now, we're still holding above this line, which we can see right here. I'm not sure if you guys can see it on your screen, but it's roughly $21,500 is where that 50 line is. And in addition to all this, if we look at this chart, we what was I? Yeah. In addition to all this, we have this. Where are we at? In addition to all this, we have this uptrend support right here as well. That's kind of formed. I'd like to call it a bull flag, but the width of this is almost as wide as this was tall. So it's if you picture this, it'd be a little heavy to fall over. But this is still indicating bullishness because we have this sort of flat level above us. There's a little bit of an angle on it if you wanted to do that. But either way, the bulls, every bearish attempt to the downside has been met with stronger attempt from the bull, smaller attempt from the bears, and the bulls keep trying to knock on this door. Now, to highlight this, when we pull down from here, you see where this previous level of support is. This previous low is right here, 21,500, which is, we can see this here on the right as my mouse hovers over it. 21,500, 21,000. Yeah, so this is perfectly in line, also giving us more support in regards to this 50 line that we can see right here. Now, what I do want to show you is this chart right here. You see, this is very bearish. Bitcoin on the 2-hour chart, it's looking like this could break down. But what I want to highlight here is the fact that every time we look at a chart, we need to look at all data available on the chart. And if you thought that when you first looked at this, you need to realize that this chart, what is this, 21,470? This is 26,000. This is an inverted chart. For some reason, certain patterns are more easily identified to some people if you invert the chart. And if you were to say that this is bearish, then, and you know that this is inverted, so this coming down right here means going up in price. Excuse me. This would be breaking out to the upside. Then let's also look at this and realize that we are forming this pattern, and this is knock, knock, knock. Hopefully it's knocking on heaven's door so we can break out to the upside. The only caveat here, and I've pointed this out a number of times, is that we do have this golden pocket that is from, if we zoom out just a little bit, this golden pocket is from this breakdown level right here all the way down to our low. And we're literally knocking on that door right here, but we're showing a pullback with some increased bullishness coming into this. Now, the caveat with all this is despite where I want Bitcoin to go or not go, we have to remember that today is a bank holiday. So today is effectively a weekend in traders' terms because institutions, banks, the big money players, especially a lot of huge volume that comes with them, is not in the markets right now. And the markets can tend to act a little bit more irrationally when we have these sort of periods in the market as we have right now. So if today's a bank holiday, what does that mean? That means that if this were to break out back to the upside, then while the CME futures is closed because they're closed on bank holidays, they're not opening, I think, tonight until 5 or 7. I think 7. Then if this were to just rocket right now and come all the way up to 27,000, or even this spider line I have here, 26,000. Then that means we would have a gap between where the CME futures closed on Friday and where they open tonight. So what I'd really like to see happen is, and that's not the end of the world, but if we do have that gap, gaps tend to be filled on like a 90% or more hit rate. So I'm looking for this to sort of cool off as it stands right now in this area, maybe pull back a little more, tap again. And then tonight, anytime after 7 p.m. tonight, whether it be midnight tonight or tomorrow morning or anytime after tonight, really, then we get the move up, because then it can move up in conjunction with the CME futures. This way we don't create a gap and we don't create any sort of speculation or questionable narratives around what price action will do if it does break out and leave that gap below it. Either way, even though that I'm saying this about the CME, I will say, either way, even if this did break out now, let's say in the next 2 hours, before the CMEs are open, then any sort of move up to these levels at the 28,000 or 28 to 30,000 level, we very likely would hit our head on these levels. This is previous price action, as we can see right here. And so we very likely would sort of hit our head somewhere around here and do something similar to this, if not pull back a little bit anyway. So I just would much prefer to have as little hurdles within my trading sort of thesis as possible. And so if this waits to push up until the CMEs are open, then that gives us a little bit more confidence in the move, because that means institutional traders are participating in these moves as well. And they're not trying to move that price back down to take advantage of those levels that they missed the ability to get orders on. Now, what I want to say here is we had a great newsletter I put it out a little late Saturday, and I was just upset that I didn't have time to get it out Friday. So I worked Saturday afternoon and in the evening, and I sent it out Saturday night. So if you're on the BitLab, if you haven't gone over to bitlabacademy.com, definitely make sure you do that. That's down here on the bottom, and you, make sure you follow all those socials. But then come over to bitlabacademy.com, sign up right here with your email, get involved in the newsletter. You also get access to win a free month of courses and a free month of the indicators, and you get the newsletter. And in the newsletter this time, I also put in a poll. I put in some charts about what I was seeing. I put in some other resources. I also put some, it was a good newsletter. And then towards the bottom of it, there was a button that you could utilize to click on and vote on the content that I'd be covering this week, some different segments, as well as some of the content you wanted included in the newsletter, and then also ability to put in some of your sticking points. To make sure that we are addressing the things that you're asking about. So with that being said, I'm not going to pull up the thing because it'll show people's info, but I will let you know on the vote. Basically, there was one of the questions was, what altcoins would you like BitLab daily streams to spotlight next week? That was this week. Top 5 choices will get focus. And the top 5 choices were Cardano, 1, 2, 3, 4, 5. Cardano, Atom, HBAR, XRP, and Filecoin was the top 5. So today we can jump in and do some TA on. We did Cardano yesterday, the other day. We'll do HBAR first because this has the second high. Cardano and HBAR are tied. So we're gonna do HBAR today, and then we will do ADA. We'll do ADA and another one tomorrow. We're going to do some other coins as well. We still have quite a bit of time in the stream, but let me get back over to my window. How's everybody doing today? Let me see. There we go. Okay. So we're going to do some charting here in a moment. But I was having an issue on my YouTube. Okay. Here we go. So before we do that, let's go ahead and jump in. Go ahead and look at where we're at on a bunch of these coins, a bunch of these projects. I use different resources on here as I stream so people can see the variety of different sources they have. I use Masari.io sometimes to get my sort of coin market caps because you get a lot of info. And we can see Bitcoin's, of course, right at $25,000, which is, look at this, man. It's been a good year so far. Up 50%. Ethereum up 42% this year. BNB up 30%. Cardano up 64%. Polygon 94%. So we're seeing a lot of good movers here. Let's get down to see where about HBAR is. HBAR Hedera Hashgraph, great project. This is up 133% this year. Holy cow! Yeah, I'm glad I found some entries of that when it was on the lows. Also, the graph, I made some heavy moves into back at the end of December, beginning of January, up 203%. So we could see here, we got a lot of good movers, a lot of good info here. So let's go ahead and jump in and do some charts. Before we do that, I do want to ask, I'm going to sort of cruise through the comments real quick. Danny Tusax, that was a 50 and 200 day moving average. And that was identified because if you, I'm not singling you out. I'm singling every single one of us out. When you look at a chart, don't look at it and get confused. Look at it and just find patience. Look at the chart and go, okay, what data is available to me? Well, on this one, we can see up here on the left, Bitcoin USD daily. So this is the daily chart. Therefore, these numbers are relevant to the daily. If this is a 50 and a 200 and this is on the 1 hour chart, then that would be a 200 hour and a 50 hour. If this is a 4 hour chart, then you'd have to do the math. Yeah, so you would just want to pay attention to all the data that's available to you on the chart, because typically charts will give you a good indication of what's going on within here. Pull some fibs, Kelly. Oh, we're going to do some fibs. Hey, everybody, write down, throw a comment in the chat here, or whether you're here on BitLab or on the HIT Network, or if you're watching later, drop a comment below. Let me know what your favorite two indicators are in terms of stock indicators, whether it's using moving averages or RSI or MACD or volume. Let me know what they are. And then also let me know which indicator you have the most trouble with. We will definitely try to make some content around that. I'm going back to New York on Friday, and I've been filming. You guys have no idea. I've been filming so much content for BitLab Academy. I was here on the weekend filming, now trying to get things uploaded, and I'm filming another 25 or so lessons this week. We're trying to get all these things integrated, so there's just like, you don't even understand how much better, how great the new content is for BitLab and the new website and all of it. So really, really great. So everybody, thank you all for joining here. We try to bridge that gap from beginner to pro, not just doing TA, but actually breaking down some of the concepts, helping people understand. So please hit that like button, hit that subscribe button, ding that bell. Really appreciate you all. Now let's do some darn charts. All right, let's get in here. All right, so here we are. We're going to do HBAR. We already did. Let's do a little bit more Bitcoin just so we can see some potential levels. So we have this level right here. Let's do Option F. If you're on PC, it's Alt F. This gives us a Fibonacci. We're going from this low here all the way up here, and we're going to go across. If you want to change your colors on yours so it's not super colorful and messes up your screen look, you just come here and you turn your transparency on the, you see this? You turn your transparency all the way down on your fib so you can see. Now what I want to add is I want to add a 1.618, which I have here somewhere. 1.618. There we go. So I have that 1. Okay, now I'm going to delete this. And what we want to do is we want to see Option F from this move to this low right here. And we are going to look at some of the levels right above us. The 1.618 is right at this spider line that I have, which is right at the 26,376. Now, I'm not going to give this level a lot of weight. And we've talked about this on the channel before. And this is because if we pull up the volume range, volume profile. Now double click on this, turn this row size to 200, gives us a lot more resolution, as you can see. Now, if we look at this, let's go to the 12 hour. Look at this volume gap we have right here. Boom, no volume. And so, although we have this spider line that goes all the way back, the spider line goes all the way back to levels that I charted from way back here, basically pulling some fulcrum points off previous price action, which is, look at this, these have acted as wonderful zones for where price action interactivity has been, and therefore I can rest assured that it's likely that they are going to have some interaction. So although we do have the spider line right here, there is a volume gap, but this is also in line. If we look at where this wick is, there we go. This wick would not have too much effect because it's directly above where we're at. So this level is where I'd look for some stopping point probably, if we push up to the upside here, having some sort of interaction at this price level at the 26,300 level, and then continuation up to this previous price action lows, which are right here also at the where this volume shelf sort of comes back in. Turn off auto. We see this this shelf and volume where it's big gap here, and then we have this interest in volume, which is correlated to this price action right here, and this is perfectly in line with between the 2.618 and the 3.618 levels, right in this region, which is a $28,000 level. So if we do break to the upside, I am looking for some interactivity right around 26, maybe a pause, small consolidation, and then quick continuation up to the $28,300 range. And then we're going to have to revisit it there because we're still not out of the woods. I am incredibly bullish. We are still not out of the woods to have very strong price action to the upside. We're not out of the woods to do that and then come up here and then get rejected back down, which I think is very likely, and then retest at 25 and then continue on up. And I didn't mean to do that. Then continue on up. So basically do something like this. And then here, and then probably a lot of sideways consolidation here, but having some sort of interactivity, a pause in action right at this $28,000 level, as we see, is a lot of interactivity right here, and then a break up to this macro resistance, which we can see. I think my chart got moved because this was a bit further down. So yes, right here in this sort of 32K range. Is going to be interesting to see if this is going to be our sort of initial impulse our initial bullish impulse before the halving, to where we get up to these levels into June, July, August. Maybe try to test higher. I think this sort of region here is something that we can look to once we've broken this level. Right now, we need to focus on this level. But if we do get up to these levels, we're going to have to watch what the momentum's doing. If we're getting bearish divergences, and we can look for some sort of price action in this sort of region here, the $32,000 to $38,000 is kind of what I'm looking at for our initial bullish impulse to then get some sort of pullback. Down, whether it's to the $25,000 range, or if we do get up here into these higher levels, pulling back to the $30,000 range, $30,000 range, and then continuation. But that's too far out. So, but this is what I'm seeing. If we do break down here on the price action, let's go down to the 2-hour. Auto. If we do break down here, one thing is we can come all the way back down here to the $24,100 level and still be within this sort of this triangle pattern that we're forming. It's almost an ascending triangle pattern, meaning we have a flat bottom and we have an ascending line here. It's ascending support, but that's not quite the case. We can tell by what's happening with these lower wicks. So it's almost a symmetrical triangle, but it's leaning more like an ascending. So that does lend credence a little bit to either way. It's bullish because it's coming bullish into it. But we're looking at this $24,000, basically $24,000 level. And if we lose this level, then I'm looking next spot, if we don't bounce to 23.5, and then really we got a lot of volume support. So I mean, if we lose this $23,000 level, I think it's more likely than not that when we test this, we will fall back through. So that's what I'm seeing on Bitcoin. So now let's go over to HBAR. I'm going to go ahead and scroll through. Let's see what happened. Oh, okay. I was having an issue on my side. So we're going to go over and do HBAR now. So we're going to go over here, HBAR. We're going to do the TA on this together. And we're going to do this on, let's do it on Bitcoin. Yeah, here we go. Now we're going to come out. What do we always need to do when we are doing the TA on these charts? We want to look at the macro, midterm, micro. So first step is we have essentially a full market cycle where we have the accumulation zones, push up, pull back, push up, pull back, push up, in pattern top, another in pattern top within this. And then breaking all the way down to accumulation. So what we want to do is we're going to do option J. We're going to come across, do it at the top. Option J, Alt J if you're on PC, gives you a horizontal ray. We're going to do right here, Option J, because we have price action here. So I looked left to see if there was more, and there was more. So I went ahead and did it across. It lets me know that this is a stronger zone. And then we have a little bit of a zone right here, Option J. This is just kind of mapping out some levels, and we can see where they relate to price action. Now we can do a massive fib all the way, but this is I'm going to delete this after I do it because these levels are so high. We're not going to be there for a while. So what we're going to do is we're going to do a fib off of this level right here, Option F, Alt F if you're on a PC. We're going to the bottom here. Now the last one we're going to do is from this level right here, Option F. Okay, so this is what we're seeing. Now I'm going to hide this. There we go. So what we're seeing here is that the HBAR has pulled back rather dramatically, of course, like everything in the space did through all of 2022. And we have our volume profile here. We dropped all the way to here. We broke through this level, which is key. This is a point of control on the chart, which we can see by this red line that's sticking out of this area, meaning the most volume has been traded in this zone right here. And we broke clean through it and then used that as support. Now, in addition to this, as we've pushed up, we can see that this is our golden pocket. I know because it's the two lines very close together, the gray and the green. This is a golden pocket, which we can see right here. And by the way, if you do not have golden pocket set up on your charts, you can come over here. I'm just turning these off. You can just delete one of these, one that you're not using, and you're going to want a 0.65 and a 0.618, and turn them both on. And you can see that line that's going on and off the screen. On my charts. So it's this right here. This is a golden pocket. This is essentially this 0.618 is a golden Fibonacci number, the golden sequence. And nature, not just charts and price action, nature generally respects this level more than I can even, I could give you 100 different examples. The way forests are organized, the way nautilus shells are perfectly symmetrical, the way flower petals bloom perfectly symmetrical, the way tree branches grow off of a tree. It's organized with this golden fib level, and price action tends to respect this as well. Is it because price action is respecting it, or is it because price action is determined by the human players that are involved in trading an asset, and the price action actually is just a representation of the psychology of the market at any given time? I think it has more to do with that. So it's a bit of a self-fulfilling prophecy, but we're seeing this broke through this level right here, which if we had more of a bearish narrative on HBAR, then this likely would have gotten rejected here at this golden pocket and come down. But we broke through it, and now we're finding it as support. And we're kind of in this channel between the 0.786, as we can see right here. I'm going to bring this over so you can see it better. The 0.786 and the 0.618. But what we want to do, we're still on the 3 days. So now that we've mapped out our sort of macro landscape, let's sort of zoom in. And just before we continue, I just want to shout out everybody in chat. Thank you for being here. If this is your first time, my name is Kelly Kellam. I'm the director of the BitLab Academy, but we wanted to make sure we put out a ton of free content to build a community, get people in the know, and help the community as a whole really grasp crypto, navigate it, understand when you're watching other analysts do stuff. How do you do that yourself? How do you make sure that you can set up the charts so that you can navigate and do things profitably while we're, all of you, whether you started today or started 2 years ago, we are in the first 0.2% of time, less than that of, the growth of crypto. You are all so early. So I'm proud of everybody. Shout out to everybody that's in here because you are the ones that are going to make it, especially when we're, coming off market lows. People that come in at the tops have a much harder time because they have to come in at the top and then endure losses over, a year and a half plus. When you come in at the bottom, or you stayed through all those losses, and then now you're able to take advantage of understanding there's ups and downs. It's not just up and it's not just down. Now you can take advantage of this, and that's what this is all about. We're here to bring our experience to you. So shout out to everybody. Hit that like button, hit that subscribe button, ding that bell. It's the easiest way that you can help the channel and just help crypto move forward. So now jumping in here, let's see. Kelly, I love the info you give to the people. Thank you, Bernard Batista. I appreciate you. And thank you, Sergio. Thank you, everybody. Alex Green, I'm going to get back to you. I know you wrote me on Discord. Matt C., Alexandra G., a Mellow Fellow, Crimson Caravan Company. There's so many people in here, so many regulars. So really appreciate you all being here. So now looking at these charts, we already mapped out that macro. So now we're kind of looking, at the midterm when we look at the daily. But we all have a kind of idea that we're in this sort of interim. Ignore that we're in a macro downtrend. We're fighting our way out of it right now. Are we starting a new bullish trend? So we can see that we have an ugly W formation here, or an Adam and Eve. Either way, reversal patterns coming to the upside. We've broken these highs. So on this pullback and then this continuation breaking this high, we have established that on the midterm trend that we are in an uptrend. So now coming down from the daily, let's go down to the 4 hour. Okay, what first thing I can see here is that we've got some trends in place. We can do Option T for a trend line. Alt T if you're on PC. So we have that sort of, this acting as support. I'm just drawing out the things I see, and then I delete things off the chart. We have sort of ascending channel here that broke out bullishly, which is wonderful. But we can also do, this is more what I'm seeing right here. Yeah, it broke down. Okay, now what I really want to get at right here is that we have this essentially like a bull flag or a bull planet, where we have this sort of flagpole right here. And then in addition to this flagpole that we see, then we have a descending resistance and ascending support, which we can see right just like this. It's like a symmetrical triangle on a flagpole. And in this case, this breakout target, and this is, you can see this is also coming to a pinnacle right on where this volume profile is. Now, if we zoom back out just to get some more context of where previous highs are, so I'm going to do this one. This is actually a little lower, but it gives us some support. And Option J, there we go. So what we can see here is that we're in this, the bulls had a big push. The bears tried to take over, and the bull said, no, you didn't. And then basically pushed it back to the upside. And we're getting the bullish support is here. The bears tried to take this down again, but they haven't. And if we look to just some traditional indicators here, MACD, RSI, we can see that the stochastics sort of came off a low. It came off a low, and we are getting some increased support here. They look like they're trying to roll over, but let's go back down to the 4 hour. They look like they're trying to roll over, which is not good, but we are basically right here about the 50 line. So we are looking healthier. The RSI has moved above the 50 line and is currently holding. And now the MACD, we can look at what the moving average convergence divergence, which is essentially what the MACD is. You're essentially measuring the momentum, if it's increasing or decreasing to the upside or downside. And so in this case, we're having a little bit of we can see the accumulation within this zone. So if this were to break out bullishly, what we would do is we kind of go like this. We take this flagpole, we make a trend line, Option T, click, drag to the top of this wick, and then you drag this flagpole over to about where the apex is, or roughly about where you think it's going to break out. I'm going to delete that. And we can see that the target on this would be, I'm going to double click on the chart to minimize those other indicators. And now we can see the target on this would be, this is quite a high target, Option J. So we can see that this is roughly at about $1.12. Now we're currently, sorry, not $1.12, 12 cents. That's an amazingly huge difference. So make sure you take note of the exact numbers, because it makes every difference if you put the wrong number in when you're trading. So 12 cents, which would be, if we go from here, if you click on the chart while you're not clicking on any other indicator or line or anything like this, if you click on the chart while you're pressing shift and then click on the chart, it gives you a measuring stick. And that way you don't have to come over here and find the measuring tool. And that takes you up. That's a 38% move. Now, what do you notice here? What do you notice if this does break to the upside? Maybe this is a target from this pattern, but it doesn't mean that we don't have all these hurdles along the way. So if we zoom back out, get a better view on what these hurdles are, I'm going to press auto. Okay. These hurdles are, we need more price action. There we go. Okay, so this is good. If we break this volume node, which we're at right now, then there's not very much volume as you can see, this volume profile shrinks over time. It's shrinking over time. Alrighty. It shrinks over time, and we can see essentially once the price action gets above, it's like a car driving up a hill. This is more difficult, and once it gets over this hill, there's a lot less resistance from volume and interest at these levels as we go up. However, we do have this previous price action top, and we also have the 786 right above us, those two levels being 9.4 cents. So that's one area that I'm looking, but that's not as strong. I think that will be easier to get through than the 9.8 cents. So my target out of this would be for at least some take profits. If I were to take this trade, is this 9 point, we can see right here, this 9.8 cents or 0.0985, and then also 10 cents, 10.3 cents. And this is because two reasons. One, we have this high here we would still need to break past. Which is not only this previous high here, these are two significant highs. And then we have this high level price interactivity. So this is sort of how I look at this to the upside. Now we can go to our professional indicators, the BitLab trading stack, and we can come over first on the daily. Okay, we got a bearish div on the volume, and we can see that actually perfectly signaled the down move, and it also showed that we are overheated with this red wave right here, which is what this means. You see how this is overheated into this, and then we get a high signal, pulls back, following right out of this extremist, sticking to the upside. Now, similarly, right here, we get a bearish div on the momentum. Okay, we have four bearish divs. We have RSI. I'm going to double click on it so you can see them all. I like shorthand so it doesn't muddy up my screen. So we have the RSI, bearish divergence, stochastic bearish divergence, momentum bearish divergence on money flow, and we get a high signal. And in addition to that, if that didn't sell it to you, and we have a topping signal, which is this red wave right here, then a few bars later, which we did kind of push back up, we get the bearish div on volume, showing the volume doesn't agree with the price continuing up, and we got rejected down. Now, this is within this this chart formation right here, and the bulls, although they have held on, this is a little concerning that they're barely holding on to this line. So while this is a bullish sort of formation with the bull flag into sort of accumulation into a bull flag, the fact that we're getting a little bit of bearish div on the volume, and the bulls are barely hanging on to this sort of support level, is giving me a little bit of pause. But I think all eyes are kind of honestly on Bitcoin right now and which direction it picks to go. So if this does break to the downside, I'd be looking at it to hold option J. I'd be looking at it to hold the 6.75 cents, which is this sort of low right here. You can go more conservatively down to the 6.28 cents, which is actually this sort of trend low as it stands right here. But I do think I think things are leaning more bullish than people want to admit, because of the context of the grander markets and the grander economy and geopolitical things going on, and like, what are they distracting us from? You know, everybody's asking that with the trains and the UFOs and the all this stuff. People the markets are acting irrationally bullish right now. And so while there are some signs that things could roll over or should roll over based on historical context of how things have played out in the past in this sort of spot in the economy following big inflation numbers, things are sort of being irrationally bullish right now. So I am still leaning bullish. And what I have noticed, I'm going to shout this out real quick. I'm going to delete some of these. What I've noticed is that if we have a pattern, where's my path pattern? If we have a pattern that goes up and we have this sort of bull flag, bull pennant that's been made, this pattern is inherently bullish, okay? Now, although the pattern is inherently bullish, we could draw trend lines on this, and we can see sometimes you get a wick out of it, and that's okay. You want to draw your trend line to touch as many candle wicks or as many candle bodies as possible, being consistent with whichever you pick. So you can draw it to where it, it's touching 1, 2, 3, 4 tops here, but you have one top sticking out. That's okay because this is a more established trend line. Now, similarly, we have this right here. What I've seen a lot in crypto compared to traditional assets. If you've traded traditional assets, you might not have seen this as much. But one of the things I want to point out is that there's so much literature and study material and courses and lessons that people talk about with patterns that this is a bullish pattern. And on this pattern, what you would do is you take a measurement of this flagpole basically coming in, this price action that came into it, and you would look at this as a target like this, right? So the problem with this is this breaks out about 67 or 67, 68% of the time to the upside. But what I have seen in crypto, and the smaller the coin, the more often, the more regularly this happens, and this happens on Bitcoin as well, is that this is a bullish price action sort of chart formation. But what happens on these is that market makers, smart money institutions, they are aware that there's less liquidity in these assets, meaning that it's easier to move the assets. And they know that there's a lot of people coming into crypto that are on channels like this or many other channels, or, you know, doing their own reading, doing their own learning. And they see that this is a bullish structure. And what they do is they force price to go to the downside. And it scares everybody out of their mind. And then you have all these retail people going, oh my God, and they sell. And you see this quick move to the downside because you have a lot of, because a lot of people, there's a lot of retail traders that should not be trading leverage that are. So anybody out there that's trading leverage, I'm not calling you out. I'm just saying use good risk management and wait for trend. If you're going to trade leverage, if you're going to trade with leverage, you need to wait for a breakout of price action, a pullback, a retest, and then you trade right there on that sort of where you're re-breaking this local high from the breakout. The reason I say that is, and that is relatively conservative, is because if you're trading leverage, then you're exponentially exposing yourself to risk. If you're exponentially exposing yourself to risk, then you need to be exponentially more conservative and when you're picking your shots to take them, okay? And so this is why. Because what happens is this is bullish, okay, and then this breaks down. This breaks out of this pattern to the downside, commits everybody going short, and then you get this quick run, and then you get the long liquidations that push it further, and then the institutions buy up all that liquidity because they already saw the sentiment of the market was going bullishly. So the smart money and the long-term holders and the people that have an idea what they're doing because they're patient and they're trading on data, they're trading on really understanding the psychology of these markets, and they're using people's psychology against them that aren't aware of this, and they push this market to the downside, get people committed. Now they have liquidity to buy and take better position longs, and then now it comes up, fakes them out, and continues on to the upside. And so it shakes people out. The other thing I will see, and this is why, and I have somebody I'm working with right now that I've been. All right, hold on. I'm going to pause here. What's going on with Pete? I'm seeing all this nonsense about Pete. Is it good or bad? Pete, I don't know. I don't deal with any of this nonsense. Everybody, this is a positive empowerment, engaging community of people that are learning and growing together, sharing their experiences. We don't need to have any sort of, I don't know if this was Pete's fault or not. I don't know. I'm seeing all these messages in here, and it's distracting me because it's not stuff that's in line with what we're doing here on these charts. So, be a productive member of the communities you're in, whether it's your family, whether it's walking down the street, whether it's here on charts, whether it's in any YouTube. I don't care. I'm tired of the people that just go and disrupt things for their own sake of being heard. Be heard because you have something to add or there's something you want to know. Other than that, I don't want you on the channel if you're going to be anything other than that. This is a positive, growth-oriented community, so let's keep it that way. So before we go, I just wanted to say we will a lot of times not only get this fake out to the downside, get people committed and get better positions for longs, but because they also are aware a lot of people are waiting for this to break out, they push this up, and then they use their money to short this and bring it back down like this, really getting people to commit short, and then it continues on to the upside. So it shakes people out that want to go short from here to the upside, and then it reverses on them, shakes out the people that wanted to go long, it gets people to go short, and then it shakes out those people going short to go back long. So this is this is essentially what happens in markets when you're just jumping in because you're trying to catch it before the breakout. Don't do that. Let the market show you what it's going to do. Let it move to the upside, come back, and if it doesn't use this as support, then you wait for this move. You wait for this to play out, and then you continue. Let it, cross this level, whatever that level was, and then that your entry can be somewhere in here based on what momentum you're seeing on the charts. And that's just something I wanted to point out. So, getting back to everybody. Big love to everybody. I really appreciate everybody here. And again, I wasn't able to read the whole chat. So Pete, I wasn't calling you out. I'm calling out anybody that comes into the chat that sort of comes in to disrupt. So again, Pete, I have no idea what you said because I can't scroll through and read this all right now, but I'm going to go back through. I really appreciate you all. Please hit that like button, hit that subscribe button, ding that bell, leave a comment below. Let me know what altcoins you want us looking at. But in more reality, it's going to do you a lot. It's going to do you a lot better if you come over to bitlabacademy.com. Sign up for the newsletter right here. We have all these. I am working so tirelessly to get these updates out, and there's so much new lessons coming out. Get involved with this newsletter. It goes out once a week, and in the newsletter, you're able to vote on some of the content that's here on the BitLab Daily Stream, as well as some of the content that's in the newsletter. So get involved with that and come over. If you haven't yet, check out the indicators. I think we do have until tonight, I believe, there's still a coupon code available, relaunch 15 for 15% off your first month of indicators or courses or both. And with that, big love to everybody. Again, my name's Kelly Kellam. Thank you all for being a part of this community, growing with me. I love you all. Big appreciation. Drop those comments below. Let me know what you're thinking. Let me know what you're feeling. Let me know where you think the market's going. I will see you all in the next stream. Adios, muchachos. Thank you for coming. Thank you for being my friend. Adios, muchachos. Thank you for coming. I hope to see you again.